What if we told you that World War III has already begun and three countries have chosen a side? It's the United States of America against the allied forces of China and Brazil. But unlike the previous world wars, this battle is being fought with a weapon far stronger than tanks and bombs: currency. The mighty, once unrivaled US dollar is currently facing challenges from unexpected corners. In this video, we'll talk about China and Brazil's daring move to distance themselves from the US dollar, a seismic change that's sending shockwaves through the global financial landscape. What are their reasons? What does this spell for the US economy, and how can investors deal with this issue? Let's explore the tale of two economic giants and their bold departure from the greenback.
I guess this is it, huh? Well, it's been great.
Oh, Tommy.
Don't worry, I'll be all right.
China and Brazil dumped the US dollar for trade. On March 30th, 2023, the Straits Times reported that the world's second-largest economy, China, and the economic colossus of Latin America, Brazil, have tossed out the US dollar as an intermediary and decided to conduct trade in their currencies instead. This means that companies and individuals in the two countries can now trade directly by exchanging yuan for reais and vice versa, rather than going through the US dollar. While these changing winds of trade may favor China and Brazil, the US economy is left hanging on a thread. To know whether the pendulum will eventually stop left or right, or even fall down, we have to look at the US dollar as the world's primary reserve currency and what befell the previous global reserve currencies. The US dollar's status as the world's primary reserve currency.
You show me a pay stub for $72,000 on it, I quit my job right now and I work for you.
A reserve currency is an important foreign currency that countries store in large quantities in their central bank or treasury as part of their foreign exchange reserves. This valuable currency enables countries to weather economic shocks, settle debts, pay for imports, and regulate their local currencies. Since 1944, the US dollar has served as the world's leading reserve currency due to its stability and the strength of the US economy. A 2022 study showed that the US dollar made up 58.36% of the global foreign exchange reserves. Maybe that's why Aloe Block sang, "I need a dollar, dollar is what I need."
Need a dollar, 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 that's what I need. Hey, hey, well I need a dollar, dollar.
Now, enough of why people and countries need the dollar. Rather, let's see why the dollar needs people and currencies. How does the US dollar profit from being the world's most important currency? According to financial studies, the US dollar's status as the leading reserve currency gives it low exchange rate risks and greater buying power. Without dollar dominance, the US will lose its ability to borrow money quickly and cheaply and will face serious economic and political consequences. So you may say that the pact between the US dollar and the countries using it as their reserve currency is aimed at reaping mutual benefit. If that's the case, why then have China and Brazil decided to flush their reserve dollar bills down the toilet? Why were the principal reserve currencies before the dollars ditched? To answer these questions, hop into our time ship as we go back in time to see what really happened to the previous reserve currencies. Why did the former reserve currencies stop being reserve currencies? The world has seen several primary reserve currencies come and go. From the 13th to 16th century, gold-based currencies like the Venetian ducat and Florentine florin were the talk of the town in Europe and the Arab world. It was because gold was easier than silver to mint in standard sizes and transport over long distances. However, the first true global reserve currency was the Spanish silver dollar. This currency was the hot ticket in Europe, Asia, and the Americas from the 16th and 19th centuries. At that time, there were abundant silver supplies in the Spanish colonies of America. More recently, the British pound sterling was the primary reserve currency of most parts of the world in the last quarter of the 19th century and the first half of the 20th century. This was when the UK dominated world trade and restored the gold standard. You'd notice that none of these reserve currencies lasted more than 3 centuries in power. Surprisingly, the US dollar has only been everybody's darling for less than a century. So why does the baton of global dominance keep moving from one currency to another? Billionaire investor and founder of Bridgewater Associates, Ray Dalio, discussed this shifting tide and gave a possible explanation for it in his book, The Changing World Order. Dalio stated that currencies fall or die when central banks are forced to devalue them considerably in an attempt to ease debt burdens. He agreed that printing a lot of money and devaluing a currency may be the easiest way out of a debt crisis. However, he believed these actions could damage a currency in the long run. Dalio also argued that having one's currency as the global reserve currency is a bigger flex than having a military power.
That's a bold statement.
Still, he felt the US dollar risks losing its primary reserve status if Uncle Sam keeps creating too much money and devaluing the currency. Could this be why China and Brazil decided to choose another economic compass instead of the US dollar? Well, let's hear from the horses' mouths.
Think you could do any better?
If I couldn't, I'd give up talking.
Why China and Brazil choose to trade in their currencies. Before exploring why China and Brazil gave the elbow to the US dollar, let's take a brief look at the country's trading history. Since 2009, China has been Brazil's biggest trading partner. 27% of Brazil's exports go to China as of 2023, meanwhile only 11% go to the US. On the other hand, the South American giant gets most of their imports from China, a whopping 22.3% of imports compared to the 18% they receive from the US. Thus, it makes perfect sense for both countries to want their trade and financial transactions to be as easy as possible. Will cutting off the green middleman from their trade path make things easier? At least both countries think so. According to the Brazilian Trade and Investment Promotion Agency, the deal was made to reduce costs, promote bilateral trade, and enable investment. Besides Brazil, China has also struck similar currency deals with Pakistan, Russia, and several other countries. So you better watch out. USD, you're not safe. You're in real trouble. Pun intended.
They use the currency called the Brazilian real, which has been going down to the US dollar over the past couple years. So right now it's about 5.5, so that means 2 Brazilian real. This is equal to 36 cents.
Now that we know why China and Brazil cut ties with the US dollar, let's talk about the current crisis of the US dollar. Is the greenback really losing its primary reserve currency title? Economists are divided on whether the US dollar is losing its leading reserve currency status or not. One thing's for sure, the greenback's grip on the global foreign exchange reserves is gradually loosening. You may be forced to ask what's the difference between what we just said and the US legal tender losing its primary reserve currency rank. Hold your horses, Usain. We'll explain. Over the decades, the US dollar's percent composition of the foreign exchange reserves has reduced considerably. In 2001, the US dollar made up 71.51% of the total foreign exchange reserves globally. This quantity dropped to 61.47% in 2012. In 2022, it was only 58.36%. Note that this downward progression of events doesn't necessarily mean the greenback's primary reserve currency belt is slipping away. Potential competitors like the euro and yen are also gradually losing their foothold on the global foreign exchange reserves. Still, it's not a good sign. It means the US dollar is no longer as influential as it used to be. This makes it more likely to crash in the future than ever before. Don't get us wrong, we're not saying the US dollar will crash. In essence, its chances of crashing just increased. It may freak you out to know that a currency crisis can lead to a serious economic disaster. How do you brace yourself up for a dollar-related economic crisis?
I appreciate smart. But you gotta know in this game, man, it ain't enough.
Let's find out what investors can do to prepare for a dollar crisis. Although it's unlikely for the dollar to collapse now, investors can take certain precautionary measures and set their minds on what they'll do if things went south. Some possible rescue rafts in these stormy seas include purchasing the currencies of other nations, investing in ETFs and mutual funds based in other countries, and acquiring shares of domestic stocks with international branches. So the bottom line is that the departure of China and Brazil from the Green Mile doesn't threaten the US dollar's major reserve currency status.
Dead man! Dead man walking!
Regardless, the US dollar isn't immune to a currency crisis. American investors and foreigners investing in the United States must take precautionary measures and brace themselves up for such unforeseen circumstances. Do you think the US dollar will eventually lose its primary reserve currency role? Let us know in the comments section. You can also help us remain at the top of the global YouTube reserves by liking this video. Subscribing to our channel also helps, and ringing the notification bell as well. Adios!